In 1891, a 14-year-old boy made a bold decision. He left everything behind and ran away from his family's corn farm with just $5 in his pocket. That boy was Jesse Livermore, and the son of a poor farmer. He looked ordinary and unremarkable. What no one realized then was how naturally gifted he was with numbers. 38 years after that day, something devastating would happen in America. Millions of people would lose their jobs, and countless others would lose their homes and life savings. But Jesse's story turned out very differently. Where others saw disaster, Jesse Livermore saw the greatest opportunity of his life. The year was 1891, and America was still recovering from the financial turmoil of the late 1800s. Most Americans lived on farms, worked with their hands, and often died in the same towns where they were born. But Jesse wanted more. He dreamed of a different life, one that didn't involve back-breaking manual labor. His father expected him to become a farmer just like him. But Jesse hated that path and wanted out. Although he seemed like an average kid, he soon realized he had a real talent for mathematics. His mother, Laura, noticed this too. Her son's mind could see patterns others completely missed. His teachers also recognized his gift. The headmaster told Laura that Jesse's potential was being wasted on the farm, so Laura decided to act. One chilly autumn morning, when Jesse's father left to work in a distant field, she took Jesse aside, slipped a $5 bill into his pocket, and set him free. She told him to go to Boston, to leave the farmer's life behind and use his mind instead. She had no idea she was sending off one of the most brilliant and ultimately most destructive and trading minds Wall Street would ever encounter. With hope and optimism, Jesse began his journey to Boston. Interestingly, the mood across America reflected his own. People were starting to feel more optimistic about the future. The Industrial Revolution was reshaping the country, transforming it from a rural farming society into a growing economic powerhouse. It was a promising time for ambitious businessmen to invest in stocks and participate in the booming share market. But you see, you had to be wealthy and influential to even enter this game. For most Americans, the stock market remained a mysterious world, an exclusive playground for the ultra-rich. Around this period, the average American worker earned about $400 a year, while industrial giants like Andrew Carnegie and John D. Rockefeller seemed to live in a completely different universe. The stock market wasn't designed for ordinary people. But Jesse Livermore was about to challenge that idea when he arrived in Boston. His first job was as a board boy at a local brokerage firm, where he wrote stock prices on a large board for customers to read. That's where the term board boy comes from. While working there, Jesse closely observed the small, subtle changes in the numbers he was writing. Gradually, those numbers started revealing patterns that even experienced traders failed to notice. Within just a few months, Jesse made a remarkable discovery. By carefully studying a stock's past behavior, he could predict the direction many prices would move. It was a rare and valuable skill at the time. Now, Jesse's talent for predicting wasn't based on luck or insider tips. It was pure mathematical instinct. As mentioned earlier, Jesse had a natural ability to identify trends and detect patterns from a young age. By the time he was 16, he had saved enough money to try trading for himself. His first real trade was a bet on Burlington stock, and it earned him a small but meaningful profit. In absolute terms, this victory was minor, almost insignificant compared to what others were earning. But for Jesse, it was a revelation. It shaped the way he thought about trading. For him, success wasn't just about money. It was about proving that he was smarter than anyone else. So Jesse continued to work tirelessly, refining his skills and learning from experience well into the early 1900s. During this era, America itself was undergoing massive changes that would reshape the global economy. When World War I broke out in Europe in 1914, President Woodrow Wilson initially chose to keep the United States neutral. But neutrality didn't mean isolation. It created opportunities. American factories began producing weapons, ammunition, and supplies for European powers locked in deadly conflict. As European nations borrowed billions to finance their war efforts, money poured into American banks. The result was that the United States grew richer, while Europe was being devastated. This massive transfer of wealth laid the groundwork for what would later be known as the Roaring Twenties. During these years, Jesse had been working as a trader for some time, steadily improving his craft. His career followed a recurring pattern: periods of extraordinary success followed by devastating losses. He made fortunes and lost them quickly, declared bankruptcy, then climbed back up again, always convinced that the next trade would make him wealthier than ever. For Jesse, this wasn't just about money anymore. He seemed to thrive on the thrill, the unpredictability that came with every trade. He was addicted to it. After all, you can't be someone like Jesse without having an unusually high appetite for risk. In 1906, he accurately predicted that the San Francisco earthquake would severely impact the stock market, earning an incredible $250,000 in a single day. But within just 2 years, he lost all that money through poor trades and dishonest business partners. These repeated cycles of gain and loss taught Jesse an important lesson. The market was always bigger than any individual trader, no matter how talented. Yet these swings only fueled his appetite for risk. What started as a profession had now become an obsession, one that slowly consumed his personal life. In 1917, as America finally entered World War I, Jesse met a woman who would change his life, Dorothy Went, whom he affectionately called Dotsy. She was a 22-year-old Broadway dancer, spontaneous, social, and effortlessly likable. And unlike Jesse, she had no interest in the stock market. Dorothy fell in love with the charming, successful trader, and although Jesse was deeply devoted to her during the early years of their marriage, his greatest passion would always be the numbers moving across the ticker tape. The couple married in 1918, just as the war ended and the United States began its transformation into the world's leading economic power. Jesse took full advantage of the booming post-war economy and the vibrant stock market. He was already wealthy by then, and even purchased an extravagant estate called Evermore, a symbol of his belief in eternal love and limitless prosperity, a love letter to Dorothy. As the Livermores settled into married life, America discovered the intoxicating power of easy money. The war had turned the United States into the world's largest creditor. American banks extended vast amounts of credit to European nations, which at one point owed more than $10 billion, a staggering sum for that era. Before the war, London had been the center of global finance. But with the conflict raging and the United States becoming the hub of credit, Wall Street soon replaced London as the new financial capital of the world. During this period, ordinary Americans also got their first real taste of investing. To finance the war, the government had issued Liberty bonds, introducing millions to the idea of putting their money into financial instruments. This was revolutionary. Investing had previously been the domain of the wealthy alone. After the war, many of these new investors were eager to try their luck in the stock market. This shift reflected a rapidly changing America. Radio was the miracle technology of the age, while automobiles were rolling off Henry Ford's assembly lines at unprecedented rates. The nation seemed to be entering a new era of prosperity, and everyday Americans were caught up in the excitement. But as history often shows, nothing lasts forever. Much like Jesse Livermore's own trading record, periods of success were often followed by difficult times. And it was during this period that the stage was quietly being set for the greatest speculative bubble in financial history. But what about Jesse? What was going through the mind of the man known for spotting patterns and trends? As expected, he sensed that something was wrong. Jesse began to feel an unsettling sense that a major collapse was coming. Yet he wasn't fearful or panicked. He was positioning himself to profit if and when the crash arrived. By the mid-1920s, Jesse had learned from his past mistakes. He built something unprecedented, a private intelligence network that spanned the globe. Research became his greatest strength. He hired 60 researchers, analysts, and statisticians who supplied him with constant updates from crop reports and political developments to any data that could influence stock prices. Jesse often received information before the market itself reacted. He maintained daily communication with well-placed sources across the world. In fact, there's a story that his telephone bill once exceeded $15,000, equivalent to over $200,000 today, as he made daily calls to contacts in London, Paris, and Berlin. Through this effort, Jesse transformed trading from a game of instinct into a science based on data and analysis. He was fully committed to becoming the greatest trader alive, but all of this came at a cost. Jesse often worked 18-hour days, obsessing over every movement in the market. At home, Dorothy was left to raise their two young sons almost entirely on her own. She watched as her husband vanished deeper into a world of numbers and charts. Then there was the matter of infidelity. Jesse repeatedly cheated on his wife, engaging in affairs with numerous women across the city. Meanwhile, while Jesse built his research empire, ordinary Americans were falling deeply in love with the stock market. The economy was booming, and by 1928, margin buying, the practice of purchasing stocks with borrowed money, had become a nationwide obsession. It made trading more accessible than ever. Even those with modest means could enter the market, leveraging small amounts of cash into larger investments through loans and credit. Stock trading became a cultural phenomenon. Taxi drivers discussed trades with their passengers, and barbers gave investment tips while cutting hair. There's even a famous story about a shoeshine boy named Pat Bologna. He was known for shining shoes for some of Wall Street's most powerful figures. Because of this, he claimed to understand the stock market well. People didn't just come to him to have their shoes polished. They came for stock tips too. A similar story is told about a fortune teller named Evangeline Adams, who built a successful business predicting market trends through astrology and crystal balls. This optimism was perfectly summed up by a General Motors executive, who confidently declared that America had reached a permanent plateau of prosperity. While nearly everyone, experts and everyday people, were trading advice and hyping the stock market, Jesse Livermore was in a very different mindset. He carefully studied his charts and global reports, and what he saw was deeply concerning. By the summer of 1929, Jesse's network had begun sending increasingly troubling reports. Interest rates in London were rising, a sign that money was leaving American markets. A prominent British financier, Clarence Hatry, had been arrested for large-scale fraud, shaking global confidence. Jesse's analysis also revealed that stock prices were now far beyond any reasonable relationship to corporate earnings. The system had grown dangerously fragile. Everyone was chasing profits while ignoring the larger risks. Jesse, however, could clearly see that the market had become a pure speculation machine, disconnected from economic reality. While Wall Street figures like Charlie Mitchell continued to spread optimism, Jesse quietly built massive short positions, betting the market would collapse. It was a lonely and risky stance, going against the entire financial establishment, but Jesse believed the market was about to fall apart. At the same time, his personal life was crumbling too. Dossie had discovered his repeated affairs. Devastated and humiliated, she turned to alcohol, often drinking herself unconscious by evening. Their grand estate Evermore became a place of resentment and broken promises. Their two sons, Jesse Jr. and Paul, were sent to boarding school to escape the toxic environment at home. Jesse was so focused on market trends that he barely noticed his family falling apart. Then came the inevitable day, October 29, 1929, Black Tuesday. Jesse's predictions came true spectacularly. As 16.4 million shares changed hands and the Dow Jones Industrial Average collapsed, Jesse's short positions generated profits beyond imagination. In a single day, he made $66 million, and his total profit from the crash surpassed $100 million. To put that into perspective, Jesse earned in 6 days what most companies made in a year. He became one of the richest individuals in America, and indeed the world. That evening, as millions faced financial ruin, Jesse returned home in his Rolls-Royce. Inside, Dossie and the children were terrified, having heard the news of the crash and assuming Jesse had lost everything. Instead, he told them the truth. They were now unimaginably wealthy. But Dossie struggled to process it. Her husband had profited from one of America's worst financial disasters, while she was preparing to support him through poverty. As Jesse counted his fortune, the United States was descending into the Great Depression. By 1932, about 13 million Americans were unemployed, roughly 1 in 4 workers. Families lined up for bread, banks were failing, and optimism from the Roaring '20s had vanished. People who had lost everything looked for someone to blame. Many focused their anger on the man who profited while millions suffered, Jesse Livermore. Death threats poured into his home, and he was forced to hire armed guards for protection. The man who made the greatest fortune in Wall Street history became one of the most hated figures in America. and his triumph in 1929 marked the start of a personal collapse. His wealth couldn't save his marriage, and in fact it made things worse. Dossie's drinking intensified, and she started an affair with a young prohibition agent. In 1932, the couple divorced in a bitter, highly publicized case. Incredibly, Dossie remarried less than an hour after the divorce was finalized and moved with their sons to the West Coast. Jesse remained alone in the massive Evermore mansion, surrounded by wealth but cut off from human connection. Even more devastating for Jesse was the realization that his greatest talent, reading the market, was gone. New regulations after the crash changed trading forever. The free, unregulated market he had mastered was replaced by one with strict oversight and firm rules. Jesse could no longer find the edge he once had. As America slowly recovered under Franklin Roosevelt's New Deal, new agencies like the Securities and Exchange Commission, SEC, were created to prevent future market manipulation. Banks had to separate commercial and investment activities, ending many of Wall Street's most profitable practices. These changes were necessary, but they created a new financial world, one that old-school traders like Jesse struggled to navigate. He tried repeatedly to make a comeback, but every trade went against him. By 1934, he had lost nearly all his wealth. The $100 million fortune was gone, and he faced bankruptcy for the fourth time. The breaking point came in 1935, when his eldest son, Jesse Jr., was accidentally shot by his mother during a drunken argument. Although the boy survived, the incident shattered Jesse's confidence in his ability to protect his family. He spent the next 5 years trying to rebuild his finances and relationships, but the magic was gone. He remarried a woman named Nina, but the same destructive patterns and obsession, neglect, and infidelity continued. His trades kept losing money and his debts grew. Finally, on Thanksgiving Day, November 28, 1940, Jesse Livermore walked into the Sherry Netherland Hotel in Manhattan. After ordering a few drinks, he went into the men's room and shot himself. Police found a suicide note addressed to Nina. In it, Jesse wrote, "I am tired of fighting, and I am a failure." The phrase, "My life has been a failure," was repeated several times. The man who once built the greatest fortune in Wall Street history died believing he was worthless. A tragic reminder that money cannot buy happiness, peace, or redemption. Jesse Livermore conquered the market, but lost himself in the process, leaving behind a powerful lesson about the real cost of financial obsession.